All right, guys. So I'm just going to go through. We're going to see what some of these assets played out using the Fibonacci extension and retracement tool. All right, so let's get started. Earlier today, around the non-farms payroll, we had this particular move. We had a drop down in the market around 8:30. So we are currently at what is this counter right here? So this is around 8:15. All right, 8:30 when non-farms payroll came out. All right, we had this nice little drop, and then we found some form of support right here. At the time, we did what? We're going to look at our Fibonacci retracement tool, take it from here, take it down to the bottom, all right, because this is where we were at. All right, let's see. All right, there. All right, now remember we try to get back to the 61. Try to get back to the 61. We barely get there. We didn't get all the way there. Um, but we did have opportunity. All right. What crossed the 23, came back below the 23. We tried to fight to get back up here. Got real close, but we didn't get all the way. And then, of course, it fell down. So that would have been a win on taking that particular retracement. Now, let's take this extension. We got extension point. We can measure. All right, boom. All right, target 1, target 2 hit. All right, so this will be the third target. I'm doubt that it'll get here today on a Friday, so maybe these targets will be hit next week for the most part. All right, let's get out of that. Now let's go look at another pair. All right, we got the Euro USD. We're gonna do the same thing. All right, we're gonna take this little impulse that was right here. All right, we're gonna bring it up, and we're gonna see that boom. All right, we see right there, we got the 61%. All right, it was hit, so that one was a success as well too on the pullback. Okay, so we did get that. All right, now we can do what? We can measure the extension. So we're gonna measure that whole move as an extension point. And we get that. Also remember I got kids in the background, so if you hear that, that's what's happening. All right, so here we go. Target 1 and 2 hit. All right, and this would be the third target. This possibly could be hit later next week or so if this trend continues. All right, so that's 2. All right, so if we take this drop right here on US dollar, Japanese yen, we did not get a pullback to the 61. However, we did get another opportunity here in place. I'm sorry, this is 2:30 in the morning. My bad. We should be looking at this. All right, so this is 8 o'clock right here. And then this drop. Okay, here we go. So we should be looking at this drop, not this one. All right, here we go. We got here to this point. All right, this is where price turn around at. All right, of course, across 23, it blasted back up, hit 61. No brainer. Came up here, got some more. I took it to the downside. All right, so then what we have to do, we can measure this move right here, and that can give us downside targets. All right, target 1, 2 hit, and 3 is left. All right, let's go to the next one. Australian dollar, US dollar. All right, get that drop. And we were able to find price came back 61. Of course, it went higher. We got that. And now we can, of course, you can measure that little impulse. What happened? Boom, bam. All right, targets 1, 2 hit. Third one's up next. Go to the next one. CAD JPY, same thing. Boom. You can take this measurement there and going to the downside. Across that 23. We got down to 61 blasted through. Of course, we got to this area. So we're pretty good on that. Of course, this is a inverted or a diagonal zigzag, a double top zigzag. So it may push up, create what we call the W pattern. And sometimes the W pattern is just really just a double top. Double bottom as well too. So price may fight to get back up here to this area right here. for the most part. Let's see. When did this was at? This is not 9:30 something. So it would have been this because this was at 8:30. We spiked up here, right? And so we can measure that as well too. So we got a spike, bam, boom to there, and then we had our retracement level. All right, and so we can know we want to get at 61. We could have rolled this back down to the 61%. All right, so we're good on this. What we can do too is we can go ahead and we can measure this spike, and we can get the upside target, and we can reverse it. So even though I'm doing one side, you can need to do it for both. So we can do a bearish and a bullish scenario. All right, and so this is where we're really trying to get back up to in this zone, based off the impulse. Or, all right, if that's not the dominant trend, we got to take this. I'm sorry, I didn't mean that. We got to take that impulse, and we got to consider this one. All right? This right here. All right, so we can take that, and we can actually measure that as well too. Um, there to there, and based off that move, this is the next downside target based off of that. So you can basically try to play in either direction on that. So this would be somewhat like what we call a bracket order. All right, you basically are waiting for key levels to be violated before you take that trade. Which essentially, I mean, we're not talking about anything until that is probably broken and this. So the highest risk reward is actually the downside one and not the upside one, because of location and what has to happen before that's even valid. This makes more sense to break and hit that than trying to wait to break this to hit that, if that makes sense. All right. If you look at this pattern right here, you see something similar happen over here. You had a nice little double bottom. We get back up here to this line. We got rejected and we push down. That look like something that could be occurring right here. We get down here, push up. We do a double bottom. We may get back to this area right here, and then we push down. All right, next. Euro JPY, it's at 8:30 right here. All right, so we got to spike up. All right, and this is what you want to see. You want to see impulses. All right, some gives you impulse in the direction. All right, the only reason why we're playing the pullbacks is because we uh, uh, something strong like that. Sometimes it needs a lot of breathing room, so it needs to come back like a bow and arrow. All right, what happened? Price came back across that 23%. We came to the 61. Boom, targets hit. Of course, you can always go down to lower targets, but I'm just giving y'all a simple plan. I'm keeping it simple like that. We can do the same thing if we're going off this impulse. We're looking for what bone. Get that. All right, these are upside targets based off of that. And you can measure this impulse to get the downside targets. Now, there is another way too. You can measure this impulse as well to get the downside targets instead of the bigger one. And this is what you're looking at. So if this fails, then this would be the target based off that impulse, if that makes sense. What do you also notice? You also notice that this pattern, you just saw it on the other pair, like that W pattern we was talking about, seeing like these are shaping up to be the same. So what this is a form of arbitrage where we can find arbitrage opportunities in the market by looking at other pairs and how they move. And we can see the same type of patterns that are shaping up on other pairs, and that could give us a signal for anticipation that another pair may do the same thing. Now, with all things, not going to always work, whatnot. Remember, you will take L's in this market. The game is to stay in the game. Whenever you feel beat up, where you feel like you done took too many losses, that's okay, because there's going to come a time where you're going to take on too many wins, and you're going to have it's just a phenomenal month. I promise you, if you stay in the game and do this right, you eventually will have a month that will wipe away every loss that you ever had in your whole entire life. So just stick with it. British pound, Canadian dollar, all right, 830 drop, news, came down, extension, crossed 23 multiple times, came up to 61. Bam, we're good. Out of the trade. Good job on that one. Next. All right, this is gold. And then spot commodities market. Here's 830. We had a spike. All right. And spike right here. Price came back down. Definitely came to the 61. Blasted through it. That could have been somebody been made off of that one. Of course, we found our footing. We're up here to the upside. All right, we take this impulse, and then we can measure that. And this is what we will have. We will have that. And first targets are hit. And now we're probably looking for the second targets to hit based off of that. So second targets have not been hit. So this could be an opportunity for some people to find some entry point to maybe drive it up to this level as well too. All right. Next one. All right. Bitcoin. Same thing. We got the spike up to there. Price came back down to what we're looking for. We're looking for the golden ratio. Again, we get to the 61%. We did. We get back there. So if we were shorted there, we'd have been fine. All right. So that's decent on that one. All right. So you see the common theme. You stick with one thing, guys. Rep it, do it over and over and over again. We do not care if we take some L's. All right. I took an L earlier today for about $135 on one trade because I actually targets were hit, but I was a few pips off, and I never moved my stop loss in the profit. So it came back and pulled back more than what I wanted. But that happens, right? So it is what it is. All right. Targets hit on this one. Just like gold. All right. We're trying to see if we could push to get back up to this area as well, too, to finish off. And this possibly could happen over the weekend. But who knows? But trade safe. You can use your box method as well too. Play with that zone. It is what it is. All right, let's do one more and we'll end this. All right, let's finish off with Apple. All right, so we had this move that was from yesterday. All right, went open. So then we had our open this morning at 9:30, and we pulled back here. So what we want to do is we're going to measure this move from yesterday for an attack, and we got our retracement levels in place. All right, and then what do you notice? Boom, 61%, 61%. So some puts probably could have been taken out this morning to ride down to here by 10:30 a.m. We're out of the trade, all right? But what we want to do now is we want to measure that particular impulse as well too. So we could look for some opportunities to maybe go long. And I'll show you something right quick on that so you can see what I mean by that. If I say we're going long. All right, so we're getting close to here, so we can finish this out to 192.70, 175. It's the next level to get to. So I'm more than likely we definitely gonna hit that. I might not see this video until then. All right, now watch this. We got that pullback. All right, so now we can play these levels pretty well. All right, so we got the pullback. Remember what I said? We want to look for what at those key levels of the 61, the 70s, and 78s. We want to see whatever candle that got there. We want to see it engulf, and that'll give us a opportunity to get long or short, depends on what direction we're going. All right, this candles get here, but then all of a sudden this candle engulfs it. So we'll look for entry. All right, and where do you take profit? You take profit based off of the measurement of this, which we saw that was earlier up here. So whoever would been able to take this trade to have a nice little rally, get to the upside, and they're getting close to hitting their targets. And we're currently at 1 o'clock, basically p.m. And they would be pretty done for the week. All right. So just went through this Fibonacci retracement and extension tool, and all you just seen me do was just use one strategy. All right. So the goal is for you guys to rep this over and over and over again. Go through the charts, go through multiple charts over the weekend. Just continue finding impulses, measure them. All right. Get their extension points. Just do it over and over and over again to it becomes habit, second nature. Trust it. Set your stop loss, set your targets, and just eat and repeat this over and over again. All right, guys. So this is it. Got any questions? Ask. Post your charts in the group. I probably will open up the group a little bit more because a lot of people did not get the link for whatever reason because Facebook does a lot of censoring. So those links were shadow banned, and so a lot of people didn't get in. So I am looking to open that stuff back up. But I'm gonna warn you guys: if you new, you're gonna join. I'm big on just doing strategies and like working them over and over again. This is not about no true forex education as far as from A to Z. Like I give you a strategy, and your job is to try to rep that, do it over and over again, and get real um, market work in. All right, get real market experience and really working with these charts and doing these analysis because we are technical analysts. All right, that's what we use. We will grow into fundamental, so you can marry both of them together. All right, so fundamental is good too because then you can understand some of the macro and economic data that pushes your asset as well, and you can marry those two together. But for the most part, we technical traders, and this is what we do. All right, so hit like button, subscribe, whatever. I'm your boy E White. Y'all enjoy your Friday. I am out.